Hello everyone, we have made it through Labor Day and it is time for our September housing market update. My name is Justin. I am the Director of Research and Marketing for the Jessica Ball team at REMAX Traders Unlimited, and this is our September market update. This is a great quote from the Deputy Chief Economist at First American that we are starting to see some signs of softening in the housing market, but we're still very much in a seller's market, even though we are starting to see some of those initial signs. Showing Time's monthly index, it's talking about the quantity and volume of showings, and quality of showings is still very high at 189.4. And while this is declining since its peak in March of 2021, we're still well above our average annual for the past few years and well above where we were in July of 2019, a few short years ago. Last month, we talked a little bit about the percent of homes that are selling over list price. We're talking now about a slight softening of the market, and we're seeing that while just over 50% of homes sold for above their asking price or list price in June of 2021, that number creeps just below 50% for July 2021 home sales. Danielle Hale, the chief economist for Realtor.com, shares a great quote that if these changing inventory dynamics continue, we could see a wave of real estate activity heading into the later part of the year. And we do expect to see that here in the fall of 2021. The main reason why that is the continued number of new listings coming onto the market. You'll see the orange line showing the monthly new listings over the 2020 year in orange, and in green, the increasing volume of new home listings in 2021, and a trajectory of an increase now month over month since March of 2020 or 2021. We've been having conversations with buyers about how homes are less affordable now, but not necessarily unaffordable. While the percentage of income needed for a mortgage payment has climbed over the past several months, from being at a low of 13.4% all the way up to a new high over the past few years of 17.1%, suggesting that housing is getting less affordable, we're still well below our historic norm of 21.2%, or almost 4% lower than the historical norm or amount of income needed as a percentage of mortgage payments. And the Freddie Mac 30-year fixed rate on home mortgages, while it is not the all-time low that we saw in January of 2021, we are still at a very low historical rate over the past 30 years. And over the past few years, considered on a 30-year fixed rate mortgage at 2.87% in July of 2021. Something important to talk about is the month's supply of houses available on the market. And when we talk about this, we're discussing the month's supply is the number of months it would take for the current inventory of homes on the market to sell given the current sales price. This helps determine in a lot of cases whether it's a buyer or seller's market. And the quote says, historically, 6 months of supply is associated with a moderate price appreciation, and a lower level of month supply tends to push prices up more rapidly. And we're going to take a look at the very low level month supply trends that we have here nationally now. We are not at our lowest months of inventory as we look at the past few years, but we are certainly very close at 2.6 months of inventory available, just up from that 1.9 low in December of 2020 and January 2021. And if we look at just the last 12 months of inventory of home sales, as we've seen these increases in sales price and sales volume here, we see that the month's inventory supply is remaining pretty flat and very low at 2.6 months of inventory available. When you're thinking about buying or selling a home, rental property, real estate businesses, or land, work with your local trusted realtors at the Jessica Ball team with REMAX Traders Unlimited. You can reach out to start a conversation about the state of the market today as you think about buying or selling. You can call or text our team at 309-863-5600. 5045 or visit jessicaballhomes.com. Thank you, and we'll see you in October